While retail investors are busy chasing the flashy green stocks, factories in East India are already locking in massive green power contracts quietly. Steel plants, cement factories, heavy industries, they're not guessing the future, they're buying it. So the real question is East India becoming the next green energy powerhouse of India? So, what CNI demand actually means? CNI means commercial and industrial power demand. Now, this includes factories, data centers, mining, manufacturing plants, industrial parks. These are not retail consumers. These are long-term bulk guaranteed electricity buyers. So for green energy companies, this is the most powerful revenue source possible. So why is East India suddenly leading the ship? There were three silent changes that happened. There were new industrial corridors, there was cheaper land for factories, and there were faster renewable project approvals. So in states like Odisha, Jharkhand, West Bengal, Chhattisgarh, they are becoming India's next industrial and energy convergence zone. So, why factories are ditching coal for green power? Now, this is pure economics. Green power is cheaper than grid power. Long term PPAs protect cost for 15 to 25 years. ESG funding benefits. Carbon credit economics. Export linked compliance pressure. So, factories are switching not for morality, they are switching for survival and profit. Now, who makes money in this shift? The real beneficiaries are renewable power producers, green EPC companies, transmission and grid builders, energy storage and battery players, industrial park developers. So, this is not a one stock boom, this is a multi year industrial wealth cycle. Now, what are the biggest hidden risks? There is heavy project debt, there is policy flip risk, there are payment delays from industries, there is grid bottlenecks, and there is over aggressive capacity expansion. So green demand is real, but bad balance sheets still destroy the shareholders. So what does smart investors can track in this segment? So they can track about the long-term PPAs with CNI clients. They can track the debt to equity ratio. They can track the project execution timelines, transmission connectivity, and return on capital employed. And they can ignore next green multi-bagger telegram list and capacity headlines without profitability. So what is the final verdict? East India's CNI driven green energy demand is a structural industrial transformation, a multi decade infrastructure opportunity. So, this is not a short term trading theme. The biggest winners will emerge quietly, not with the headlines. If you want clean infrastructure investing analysis, long term wealth cycle decoding, no hype stock pushing, subscribe to Insider Monk. Here we are not following the trends, we track where real industrial money is flowing. Thank you.